recent month, the retailers have been making a major comeback. It's spotty in some places, but you know who called this? Matthew Boss of J.P. Morgan. He's the best retail analyst on Wall Street. He has a better handle on this sector than anyone else in the business, which is why I'm thrilled to welcome him back to the show right on the heels of J.P. Morgan's excellent annual Retail Roundup Conference. Mr. Boss, welcome back to Mad Money. Good to see you, Matt.
Thanks
have a seat.
For having me back, Jim.
All right, Matt, you have the best panoply. What a conference. Thank you for letting us up there because we had a great time with our pet from Gap. There's some big takeaways that you heard after that day. Please tell us what they are.
I'll tell you, the optimism was in the air, something we really haven't heard in the retail sector for quite some time. Strong underlying consumer, inventories in a great shape, the best shape they've been in years across all subsectors, and you have more fashion on the floor. So there's more innovation, there's more newness across the board, no matter which demographic, Dollar General at the low end, Urban Outfitters and Lululemon in the more aspirational, across the board, you're hearing these similar trends, and it's optimism for the upcoming back to school and for the remainder of the year.
Well, we had someone downgrade Dollar General yesterday saying that Walmart's pricing is competitive. When I read your piece, Dollar General's got a lot of big runway.
Yeah, we actually upgraded the stock today to an overweight rating. I mean, really twofold. Number one, more tailwinds for the low-income consumer, minimum wage increases, employment in a much better place than it's been in a long time. And secondly, the CEO of Dollar General told us that we have the competitive environment out there is the most rational that they've seen in years.
Okay, so this is important because you mentioned something else I want our viewers to understand. When inventories are low and it's rational, that means that pricing's good. So who's making that big money?
Yeah, so what you have happen is you have an underlying consumer that's strong with leaner inventories in the stores. So what's happening, you're seeing a lot more full price selling. Urban Outfitters is really taking advantage of this.
That's incredible. That's been in a bear market for almost a decade.
That's right. PVH and the global brands would be, Calvin and Tommy. And the third would be Lululemon with full price selling. They're your winner in athletic.
No CEO. And you told me they were going to have a good run. And boy, that is some fashion.
That's right. That's right. And then what I would finally say is on the value side, you're seeing the off-price retailers across the board. They have the fashion. They have the strong brands. And they're also offering that value. So Burlington, TJ Maxx, and Ross Stores, all three of them, I think you can own the entire subsector.
Burlington's quiet, but they're doing some amazing things since they came republic, right?
Yeah, opportunity to still double their margins from here, solid productivity, and TJ Maxx, nice global story. Now you have Europe that's starting to kick in with a margin opportunity there as well.
All right, so mixed view on the major department stores, but give us the line and keep in mind Amazon. Tell us where they are versus Amazon.
Yeah, you know what's interesting is I think those that have been investing over the last few years, and it's really across the board. So omni-channel capabilities, the ability to buy online, pick up in store. Amazon's strong. Amazon is going to continue to gain market share, but I think you're seeing signs of brick and mortar stabilizing. I think you saw it this fourth quarter, and I think now as we move forward, you're seeing retailers fight back. And so I think you're seeing more of an equilibrium here. I think Nordstrom would be your fashion player and hits on a lot of the themes we're talking about. I think you want to own the moderate middle-income consumer. To me, that's Kohl's. And speaking of investments, Macy's has made a heck of a lot of investments on the last couple of years, and I think there's a story that's unfolding.
Can that have conviction there, the CEO?
I think Jeff is in a really solid place, and he's brought on some talent. So the new hire from eBay is a big deal, and I think they're really going to hit on some of this omni-channel and brands and the e-commerce versus the brick and mortar.
All right, last question. China risk. We know that President Trump's fighting back. We have a fighting back president. What could it mean for some of your companies?
I mean, this is the wild card to the space. So I think you have to look at it twofold. Number one, who has the most exposure from a foreign sourcing perspective? I think if you look, it would be the global brands. So the Ralph Lauren's of the world and Coach would be your two highest from a direct sourcing perspective. Secondly, on the ground operations. So that would be your Nike and your Tiffany's, where if there is retaliation, then I think you need to look at that. And third would be your department stores with higher private label. What I will say, though, retailers are taking a wait-and-see approach here. They don't believe that right now apparel and footwear is not in the conversation, and they do believe that pricing power will longer term separate the winners and the losers.
Well, these are great stories, and I'd love to hear the optimism, which was, of course, absolutely in sync with what these people are saying. That's Matthew Boss of J.P. Morgan, the best retail analyst on Wall Street. What a fabulous conference. I learned a lot. I hope you learned a lot just now. Mad Money's back after the break. Booyah! Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.